Hello, investors. Welcome to the channel where we look for possible swing trades using technical analysis. Before we begin, all I ask is you hit the like button and subscribe. It really helps out the channel. And with that, we're going to take a look today at Commercial Metals Company, ticker symbol CMC. This is a small cap company with a market cap just under $5 billion. And as the name implies, it makes metal of many different varieties. Perhaps the best known item they make is rebar, which is used in all sorts of other construction, but the company does make a vast array of metal products, many of them for industrial uses. If you're interested in learning more about the company's products, you can certainly check the company's website. And this company has been around for 108 years. It's survived world wars, depressions, recessions, and all sorts of calamities over that time. So it seems unlikely the present trouble in the market or the economy will cause it to fail. And here we are on Commercial Metals annual chart. You'll see the share price is well below all the moving averages. In fact, there was a significant gap down after their last earnings call on October 12th. And the share price perhaps has found the bottom. We've only had one green day yesterday, so it's certainly too early for me to call a bottom in this particular drop, but it's possible, and we should keep our eyes peeled for that sort of thing. And the RSI is oversold and appears to be turning up. Both stochastics are oversold and appear to be, if not turning up, at least moving sideways now. We have drastic spike in selling volume, as you might expect, and that volume is decreasing and has finally been replaced with some green buying pressure. And the MACD does look to have formed a trough and is rising toward the bullish cross, although it has not formed that cross yet. And one other interesting point I'll look at here is if we back this chart out to a 2-year chart, you can see there is something of a channel here. It's not perfect, certainly, but if we were to draw a line here, you get the idea. There was an ascending line of support that the share price touched quite a few times, at least close enough that you could say, yes, this is a line. And if we drew another line over here on the other side, it's not quite as good, but it also would form a upward boundary for that channel. And those two lines are approximately parallel, certainly close enough that you could say, yeah, this is an ascending channel. And what broke it? Well, this bad earnings call and the poor guidance they offered for the future, causing the share price to finally break out of that trend. So what can we expect then in the future is that if the share price recovers, it will come back up to that ascending lower channel line and find resistance there. But given the approximate location of that line, you could expect that to be around $48 to perhaps $50 a share, which would be quite a nice increase in share price. It could be up to 20% increase from where it is today. And if we look over here on the fundamentals of CMC, you'll see there is very low short interest at 2.22%. Institutional ownership of 85% is quite impressive. The debt to equity ratio shows it has less debt than 76% of its peers, although I will point out that these are high numbers for debt. So it does have significant debt. It's just less than average for the industry. And the PE ratio is particularly low, 5.52 PE. That's not just low for the industry. I mean, it is low for the industry, but that's just a low PE overall. And that 5.52 is lower than 85% of others in the steel industry. And then we have the gross margin of 20.71%, which is lower than average, less than 71% of other companies. But then it makes up for it with a better than average operating margin of 13.23%. And that operating margin beats out 85% of its peers. And I'll point out the net profit margin is just below 10%, which is absolutely solid for this industry. Return on equity of 23.21%. Shows it beats out 76% of other companies in the industry. And the growth rate is a little low here, but I will touch on this again in a second. This says the earnings per share growth rate is less than 66% of others in the industry. And the dividend yield is 1.6%, so just slightly above the market average. However, the payout ratio is not even 9%. So this is an exceedingly secure dividend. You can expect to receive that for a long, long time. So if you are a long-term investor, then you can let time compound this one for you. It might be something you want to look at. And one last thing I'll mention here about the growth rate is that I checked on the cash flow growth rate of this company, which seemed particularly high. The 5-year annualized cash flow growth for Commercial Metals is 31%, which is outstanding. And that seems at odds with the earnings per share growth rate you see listed here. So take both of those numbers into consideration if you are thinking about starting a position in Commercial Metals. And please let me know what you think of this company in the comments below. And if you enjoy having ideas like this sent directly to you, please hit the bell notification to be alerted when new videos post. Remember, I'm not offering financial advice because I'm not a financial advisor. These videos are for entertainment, discussion, and education. But if you'd like me to analyze a specific company using these metrics, just let me know in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.